Okay, guys, welcome back to the Go Global World, no longer daily 5-minute podcast. We still do it every day, but I violated the law for the fourth time now. This is our fourth investor interview. And yeah, guys, this is getting really big. You guys love the feedback, and I'm gonna be completely biased today because this venture capital firm is in the best state ever. And that's Texas, right? You know, everything about Texas is great. And yes, I do actually wear this hat and I do drink coffee from this mug that says everything is bigger in Texas because everything is bigger in Texas and better in Texas. Now, with that being said, so you guys kind of know what we're into today. We're going to be going over our first Texas venture capital firm. They have a startup accelerator component and a venture capital component. Next one is something that if you guys spend a copious amount on PitchBook data, capital formation in Texas, why that's becoming important, the due diligence process for this particular firm, and something we always try and harp on with every investor interview, that is diversity in the venture capital space. That can be women founders, underrepresented populations, facts, figures, statistics, and however people want to frame it. So, with that being said, we have one of the founders and managing partners of Sputnik ATX VC, and I'm just going to let them go over their fun because I don't want to introduce greatness without them going first. So, with that being said, floor is yours.
Chris, you're too kind. Yeah, I'm Joe Merrill. I am one of the founding general partners at Sputnik ATX in Austin, Texas. We are a VC fund that has an education component with our funding. I almost don't like things being called accelerators or incubators because it's just kind of all over the map what that is. I joke that when I write a check to somebody, I teach them how to sell and do marketing, right? So we joke that we teach nerds how to sell, right? But I think that we are based in Austin, Texas. We've been doing this for a while now, and our results are second to none. I think right now our IRR is something like 72%. We are a top quartile, top decile fund, and we continue to do really, really well.
That's awesome. And in regards to one, before I kind of ask about your guys' name, I always like the branding of all the other different firms. But in regards to the intricacies, does your fund have a particular investment thesis, and do you guys have a current investment focus right now? Because as we all know, the market's crazy. And speaking from a person that is active in the Texas venture capital landscape myself, I know that like fintech's always been a big thing in Central Texas. So, is there anything that you guys are kind of focusing on right now?
We don't have a particular focus. We do everything from blockchain to nutritious donuts. We've got Martech, Growth Channel, which is one of the fastest growing Martech companies right now. They're in our platform using AI. It's like an AI digital marketing agency. Quite frankly, everybody should be using them. And crypto, Vertalo. We just have a little bit of everything.
Wow. Yeah, yeah, that's very vast, and I say that provides a lot of different type of perspectives and a lot of upside. Honestly, I think we're starting to see the generalist firm kind of be the standard in like a lot of places. So your name, Sputnik ATX VC, can you run us through how that name came to be?
Yes, my business partner is Oksana Malasheva, and everybody thinks it was her idea. She is Ukrainian. She's from Kiev. Not her idea. It was my idea. In fact, she has post-Soviet PTSD, so she was almost adamant against it at first. But the reason why we named it Sputnik is because that was the first thing mankind put into space. And it was some colonel in the Russian army who had this idea that instead of building a series of radio transponders across to Siberia, which is a huge area to cover, you just put up a geospatial satellite. And that, in theory, if you put something high enough, it would just stay there. And that was a really radical idea. And because of that idea, look at all the other technologies that have come from it. So if you just think about what the space race did because of Sputnik, I mean, we have the internet, Velcro, Tang, everything from technology to CPG. All this stuff came because someone had this idea that was just incredible. And like that idea, we're looking for founders that are doing something really incredible. And we're not looking for incremental innovation. We're looking for people who are doing just really cool things.
And I guess last part on this, because like I said, I feel like if anybody's just living, breathing, and existing in Texas, you're already in winner's territory, minus the Dallas Cowboys. Sorry, guys. Where do you guys see yourselves in 5 to 10 years? Do you guys see yourselves being like the next Andreessen Horowitz of the South? How high
No,
do you?
no, no. In fact, we're kind of the opposite.
Okay.
We will always be a small fund. We firmly believe that these billion-dollar mega funds. I used to manage one. There's diseconomies of scale. The returns aren't so great in those funds for investors, and that when you do early stage VC, it's really kind of the heart of venture capital. It's where you see the best returns. We're able to deliver high returns to our investors because we're not a big fund investing in late stage. We want to stay small and stay focused. I kind of tend to think of us as kind of like if there was like a Navy SEALs Delta Force version of Y Combinator that was small, targeted, and more elite. That's us, right? So Y Combinator kind of accepts everybody. They have huge cohorts and whatnot, right? We're very, very restrictive. We have, I think we're the hardest VC to get funded from probably in the world. We had 1,200 applicants for our last cohort, and we have 5 companies in the cohort. And so, your odds of getting accepted by us are very low. But if you do get accepted, we have a very high success rate, where YC's failure rate is like 87%. I think we've only had 6 shutdowns out of the 60 some companies that have come through the program over the past 5 years.
Yeah, and like that's because like you keep it lean and like you guys know what you look for. And I would say just kind of like a macro trend for the audience, right? So everybody looks at like A16Z as like this totalitarian body that doesn't make mistakes, but now they've had like so many failures in the past, and like I've shared this article a lot. It's like now they're courting capital with like Saudi Arabia and stuff because they're like, okay, now we got to go over somebody else's after ours have failed for a certain amount of time. Not talking down to A16Z, but this is just an example where bigger might not always mean better. So,
There's definitely diseconomies of scale in venture capital, and people are going to have to start realizing that.
so we're gonna go over just kind of like the area you guys are strategically just placed at, and like why Texas. And
Mhm.
I love this state because anybody that knows me as a podcast host, I was in the military in El Paso for about 5 years, and Austin, Texas was where I first found out about venture capital and the Veterans of Tech Summit with Capital Factory. A lot of great veteran managing partners makes me feel like, because I'm still trying to break into the industry, that every internship I've done, every work on a deal, because freaking Texans out of all people, I feel like they're just model American citizens. You just always walk in the store. Yes, ma'am. No, ma'am. Yes, sir. No, sir. Let's collaborate on this project. And I feel like that's something you don't get sometimes, even in Silicon Valley. So, a lot of people with COVID and with the exodus of California due to a lot of things, like, I don't know, let's just name one, taxes. We're starting to see capital formation go to like Texas, Boise, middle America, which is great. And Texas seems to be one of these hubs, but I know you guys have been in Texas a lot longer than like these Exodus and all this other stuff. But can you speak on the Texas venture capital landscape and how, I mean, the numbers say everything's going up, especially in Austin. So like where do you see that going in the next like 5, 10 years?
Yeah. What I kind of see happening, I mean, globally, is there's this realization that what happened in Silicon Valley can be replicated elsewhere. And what you really need is innovative people who have access to the education and training on how to build a billion-dollar company, and access to networks and capital so that you unblock the resource constraints to making that happen. And Silicon Valley kind of monopolized that, and people are beginning to realize that the only smart people on earth don't live within 50 miles of Stanford, right? And as we start realizing how much everyone in the world can contribute, there's other places that are becoming really important, and Austin's becoming important quickly because we have all the ingredients here. We have an amazing university system in Texas, the University of Texas, Texas A&M, the Texas State system. We're churning out top tier engineers. We also have some incredible private schools, Baylor and Rice and others that are just continuing again to just churn out top level talent, top level engineers. And the knowledge on how to launch a successful startup is now becoming easier to acquire on the internet and through other sources. And access to networks is kind of the block, right? So when we came here, both Oksana and I have backgrounds at McKinsey. I was at a large VC fund. I also had a startup and exited. And when you have that experience and you bring that network to a place like Austin, you're bringing water to a super fertile valley that's just full of people ready to farm. Does that make sense?
Yeah.
And we have people coming from all over the world because Austin has had enough success. There's been enough entrepreneurs with exits that we now have our own infrastructure of people who know how to do this. And with that, the capital from founders with exits. And so you're seeing another nexus of capital and talent and experience here that's making it possible to build billion-dollar companies.
Yeah, guys, and I just want to really drive that one point home, right? The capital and the expertise doesn't have to be in New York City
Mm-hmm.
or in California for a lot of those reasons. And don't believe all, I mean, I'm very active on Twitter, and that's what, of course, all the Silicon Valley solo GPs and venture capitalists in California will still say that today. You don't have to buy into any of that. And going back to I'm a huge fan of keeping it real. I don't mind sharing the hard things on this podcast because that's kind of what we started for. So yeah, just a little bit of background. I actually went to Rice's MBA program for a semester, so I got to see that. And then over winter break, my uncle, who actually lives right outside of Austin, Georgetown, got into an accident, and I wasn't okay then. But yeah, that's always a goal of mine to make it back to Central Texas somehow. I interned with 76 Capital up in King of Prussia, and I can honestly say a lot of my mentors live in Central Texas, and that's not by accident, right? They left New York City. They work at Scout Ventures now. They work at S3. They work at
Yep.
Austin, Texas. Like they see what's
Mm-hmm.
going on and they want to be a part of that. So that's really cool. And plus, like, how can if anybody in the venture world doesn't know what South by Southwest is, it happens yearly. I was there at Funhouse. It's an amazing event. And I think it's just like the branding.
Yeah.
Like people love to have emotional intelligence in Texas. And I feel like that's what you need for like a network. So,
Yeah. Yeah.
oh yeah, sorry. Going on to the next point, kind of like since we have you as a subject matter expert here, every fund's different, but in the regards and founders pay close attention here because people always run this up in the comments. In regards to due diligence, what is something that you guys look at closely, and what are some very important KPIs that you guys are looking at for startups, regardless of vertical or sector?
Mm-hmm. So we're a little bit we're weirdos, but this is a bit of our secret sauce in this regard because we're really looking for two things. We want a good jockey and a good horse. And what I mean by that is a great founder building something really cool. So let me start with a great founder. Great founders are gritty, they are determined, they have a will and a way to find out how to make something work. They are very determined. Starting a company is hard. They're smart. They have a high emotional intelligence, and they can be and give grace when needed and hold people accountable when needed. These are the salt of the earth people, and quite frankly, there's a lot of them in Texas. The other thing I would say is when it comes to product, we are weird because we measure something called consumer surplus. I'm an economist by training, and consumer surplus is the difference between what you're willing to pay and what you actually pay for something. And so, for example, like my pen, this pen, if this pen I paid 50 cents for, but I would have been willing to have spent $2 for it, I have $1.50 of consumer surplus, right? And we're looking for things that have massive consumer surplus over large numbers of customers, because consumer surplus is what helps you predict how quickly something can move up the J curve. And so the ability to have high consumer surplus, be able to communicate that effectively to customers, that's what helps your startup grow really fast, right? And that's a lot of our focus, is trying to find people who are doing something that is really generating massive value for whoever buys it, whether that's a B2B product or a B2C product.
Yeah, and would you say that's a KPI that so everybody wants to talk about like the big ones, right? Like LTV to CAC and all these other ones, but those really only apply when you're like in a later stage company. And I've heard of this KPI that you have talked about, but I've never seen it in practice. Would you say that this is a KPI better suited for companies that are like pre-revenue prototype, or is that just something that you guys look for?
It doesn't matter where you are. You really should be asking yourself this question: is how much consumer surplus are we really generating? Because it could answer the question, why is no one buying it? You know, you really have to offer somebody a deal they can't refuse, that the value they're getting from it is just so cool that it's easy to say yes.
Okay, good. Yeah. And in regards to, because I know you guys run a very elite type of due diligence process, but in
Mhm.
regards to the team, because in this stage of finance, you're investing in a team. So what are you guys particularly looking for from the founding team in regards to like expertise, EQ, all this other things that
Mhm.
some of it tangible, some of it intangible?
I think, there's a lot of the obvious stuff, like you want people who are, hardworking, honest, and all that, right? But I think one of the best things to do in diligence is to really understand like the emotional intelligence and the maker skill are probably the two most important things. High emotional intelligence people are able to inspire their teams to work all weekend to get something done in a pinch, and that happens a lot in a startup. And the other thing is you're really looking for their maker skill, and that could vary a lot. So if, for example, Manila, which is now, the top Filipino food brand in the United States, that's one of our portfolio companies. That was a complete blue ocean. There were no Filipino food companies out there. And it's the second biggest, you know, ethnic group in the United States, or Asian ethnic group behind China, the Chinese in the United States, and they had no representation in the grocery store. Well, what kind of person has engineering or maker skills for that? Well, Jake DeLeon, he's a Filipino American, and he comes from the food industry. And so he has the kind of the experience, know-how, the maker knowledge, if you will, about how to do this successfully. And so with everything from CPG to, say, you're a B2B SaaS company and having a founder that's a developer, right, is having that skill to be able to make product. It is really, really hard and requires a lot of dilution if you outsource early because you don't have someone who can build product. So we really look for someone who can build product internally for those early stage companies.
Yeah, yeah, and like I'm glad you kind of said that because there's always been I think that's always been like the biggest roadblock is that people kind of, they're not very cash efficient early because they're in the
Mm-hmm.
idea stage, but they're like, oh, I don't even know how to build Python, so this is cool, but we're gonna have to outsource this, and
Oh,
yeah,
like the worst nightmare for every VC is three MBAs who have a great idea and they're going to outsource the dev to some folks they met, from India or somewhere else. That outsourced dev team model, that's just a recipe for failure. And they don't realize it. It's like, take the time to find a technical founder, right?
yeah, and going back to the Texas thing, my one semester at Rice, I can honestly say, like when I was sitting in the Lilly Lab, I was one of those MBAs, but let me detract before I further bury myself into the ground. They do have a really good software engineering school like right across the street. So I'm
Yeah,
glad you let me finish
yeah,
that last part. But yeah, I'm hoping to go do my MBA part time at the University of Texas Austin because
that's great.
I want to. They have a good fund there,
Mhm.
And yeah, I don't want to be one of those MBAs that like you described.
And
But
UT Austin has a great venture program that trains people to work in funds and gets them fellowships, internships working in funds. One of the best.
in regards to, I guess, a very big ticket item right now, in regards to diversity in venture capital by women, race, underrepresented population, what's your take on that?
I'll give you my take and I'll give you our results because I have very strong feelings about this and I'm probably going to offend a lot of people, and that's okay. When 40 to 50% of founders are women and women get 1.9% of the money, I have a problem with that. When Black founders make up about 15% of founders and they're getting less than 1% of venture capital, I have a problem with that. My problem with that is as much as a human being, as just a good human, as it is as an economist, because there is this arrogance about what a good founder looks like, and it is wrong. And as an economist, this isn't just a human tragedy, this is a waste of capital. That to think that only, people who look like me have good ideas and are worthy of getting money, quite frankly, that's just pure stupidity. And it is just ridiculous. And I feel like I'm just kind of tired of that. We reach out to a lot of groups and tell them, hey, we fund everybody. But I also want to be very clear. I am absolutely looking for the very best companies that have the grittiest founders who are the smartest people doing the most interesting things of the greatest economic value. And I have in some ways benefited because I give you an example. One of our top portfolio companies is from Bangladesh. And these guys said, we were their first VC. We've written subsequent checks. And I asked them, why did you guys take money from us? And they're doing so well. They're up to over, 200 employees, and they're going to do like pretty good revenue this year. And, you know, they said I was the only VC that called them back. And so if you're not a racist jerk, you're going to get incredible deal flow right now. And when we look at our portfolio, we have over 40% of the people we fund are women founders, right? For Black founders, we're at something like 15, 18% Black founders. And across all of these different categories, we're crushing not just the national averages for VC, but we do a little bit better than even the national representation as far as like pro rata, what percent of the population is this. And I really believe as I look at my portfolio that these are I'm able to get great deal flow because of racism, quite frankly, because these folks aren't getting funded otherwhere. And when they come to me, I'm like, wow, how come someone can't write you a check? And even when I look at my current cohort of companies, so, the 5 companies that are in our current program that are going to be doing their demo day in a little bit, we don't have a single white guy in that cohort, you know? And I remember 2 years ago, we had a cohort that was all Black men. And it wasn't like we went out and said, oh, we're going to find all Black men for our cohort. It's just we went through our application pool. We said, hey, who are the smartest, most hardest working people doing the most interesting things? And when we were done, it ended up it was 5 Black men. And I remember joking with them. I said, now look, everybody, there's going to be some rumors about Joe going around, and I need your help because we do not discriminate against white people. And, we were all laughing about that at a good time, right? But the reality is just that if you're, I feel like if you want to make money as a VC, you should be unbiased. And if you are unbiased today, you're going to see amazing deal flow because sadly, no one is calling back these incredibly talented founders that don't look like me.
Yeah, and I'll just kind of compound on that point. So my last name is Gonzales, but I am also half
Mhm.
Black myself, so I've seen a little bit of this going on. But one, I'm just gonna highlight how the news is terrible. So I'm looking at Bloomberg right now. It's funny, you mentioned the number 1.9%, right? And the news tries to make money. and they say, "Oh, venture funding for underrepresented minorities has shot up tremendously. We are now up to 2.1%." I'm like, "You guys, one, you
It
guys are
doubled in
terrible."
5 years.
I'm like,
Wow.
you guys are terrible. You guys made that headline just to make money." But my mentors at Harlem Capital, Henry, Pierre, Jacques, Jared Tingle, and all those guys, they have one of the largest diversity only like funds, like you said, not being racist, just whoever. But they
Yeah.
publish multiple reports every year about, hey, this is what underrepresented founders are doing in society in these 4 quarters, and the results, like, their failure rates less than 10% in their portfolio companies and all that other stuff, and you being an economist, I'm actually hoping that you would answer this question. I've seen this, I don't know who pioneered this study, but because 'cause I've seen it on Harvard Business Review and a bunch of other things, but they're saying, like, founders that kinda had it rough or from an underrepresented population growing up, they kind of take those traits into the startup world, and, like, they can kind of withstand the economic downturns because 'cause they're resourceful. That's the instincts that you can't teach, right? Somebody's
Yeah. You know,
upbringing, and I'm wondering, like, if you heard that from somewhere.
I feel like that's another stereotype. It's like, oh, the people of color, they came from the poor neighborhoods and man, they just must be grittier. And again, I do not believe any of this stuff. I have poor white people I've funded, rich white people I've funded, poor black people, rich black people. I, I'm almost exacerbated at this point because I feel like we have to judge founders by the merits of who they are and what they're trying to do, right? And skin color is just such a stupid, stupid thing for us to have as a screening metric. And you have to be aware of systemic racism. You have to be aware of these unconscious biases. You know, honestly, I get so frustrated by this because I feel like it hurts our country, right? And we just have brilliant people that come in every flavor. And because we have people who show preference, and we do show preference to white male founders, it's like it's off the charts, you know, and it's a drag on our economy and it hurts people and it's time to stop. I feel like a lot of what happens in these statements, these are apologist comments where white men, who are the majority of VCs by far, are trying to be apologists for why they're not doing more. And they're trying to come up with these explanations, these socioeconomic explanations. And I'm just going to say they're all a bunch of hooey. Okay. They're all a bunch of bullcrap. I mean, I, those guys we funded in, coming from Bangladesh, they've got no privilege. They're really smart. They've worked really hard. They have anti-privilege, if anything. And we funded them because the thing that they're building is remarkable and they're incredible humans. And we just got to start giving more money to people like that. And we have to stop thinking about, we just have to, white guys got to stop being jerks, right? It's our problem. It's our problem.
And like, it doesn't. So one, it takes an army to kind of go,
Mhm.
because this goes way far back. Like, even if I always like rereading the book Secrets of Sand Hill Road, I'm like, yeah, that whole story was taking place. It was taking place in a part of American history that, yeah, the majority and then the minorities are just kind of came in later. Like, luckily we have the Harlem Capitals now and all these other people. And like, I was reading about a firm in Austin, actually, Growth Warrior Capital. Like, they're great also. And yeah, like, even in my case, like, when I've been knocking out interviews and stuff, and like, I'll go all the way down to the survey, even for like people trying to get in associate and investment analyst things. Like, like, I kind of get offended when I'm when I'm on the interview, and I'm like, hey, you knocked out the pro formas, the case study's good. We know this firm that you worked at. It was like, we are so glad you applied because diverse candidates, and I'm not gonna say which firm because I'm not trying to start anything, but they're like, yeah,
Yeah.
we need more diverse candidates, so maybe we can screen you past this round. I'm like, no, hold
Oh,
me to the
geez.
same
Jeez.
hold me to
It
the same standard that you would hold, because I know I'm just as good as any
That's
of those
exactly
guys
right.
that went to Harvard, because I actually was putting in 90-hour weeks at the
Exactly.
first
That's
firm. But
exactly right.
yeah,
Is that this idea that we have to somehow condescend to help these people who are just so bullcrap. Women and people of color are powerful, they're amazing, and they're talented. Okay. And we got to start recognizing that and funding that. And we have to absolutely stop this kind of condescending, patriarchal bullcrap that we do. And I'll be frank, I kind of take a little bit of umbrage at DEI as an asset class, even because I think, how ridiculous is it that we have to state the obvious, which is that here are these people who only get 1 to 2% of venture funding, and they make up, 90% of the world's population. Like, this is sick. And it's not the problem with women and minorities, it's the problem with white men. And I'm a white man. And you know what? You can't change, you can't get better unless you own a problem, right? Like, step number one, recognize you have a problem, you know? And by the way, if white guys say we have a problem with this, that doesn't make us evil. Like, there's this belief that, like, oh my gosh, don't say things like this, Joe, because you're shaming all the white VCs out there. No, I'm not. This is just a fact. And if you own it, you can do something about it. So just own it. And, I really believe in the great potential of humans. People are freaking amazing. Time and time again, I see humans doing incredible stuff. And what makes us able to do that is our capacity for change. And so let's just change. It's not complicated. It's not hard. Just look at everything on its merits. And if you do, diversity is the natural consequence, because right now, women and minorities, women and people of color, underrepresented groups, they're not getting funded. They're working harder, they're grittier, they're smarter, and they're still not getting money. And so if you're just being unbiased and you're looking at everyone, you should disproportionately be investing in them. It's just economics. And that's assuming that you want to make money.
yeah,
And
and
if you
then
want to
like
make money, you should do this. Like, this is a smart business decision.
yeah, and then people wonder why like their portfolio companies aren't doing good. I'm like, and like people, I mean, like that's just human psychology. People want to stick with what they've been surrounded with growing up. But what if
Mhm.
what you've been surrounded with growing up has been quote unquote jaded, and you kind of want everybody to be the same? That in and of itself, like you are on you are subconsciously kind of reproducing that systemic kind of racism. I'm not going to go too far in that part, maybe, but
Mhm.
yeah, and like yeah, you kind of want all your ducks in a row according to what you've
Mhm.
seen in the past, and like that's not good. Like I feel like people need to stop doing that.
It's really funny. Magic Johnson, he got up in front of a room of white male investors and I was in the room, right? And he got up and he said, first off, I just want to let you all know how much I love you, because you stupid jackasses are why I make so much money. You're racist, and I invest in underserved communities, and I am printing money. And I couldn't do it without your ignorance and your unwillingness to invest in that sector. So hats off to all of you, because I am printing money because you're not even looking there. And he started talking about, like, the Starbucks deal he did, and how Starbucks bought all of his locations back because they were the most profitable in the company, you know. And he was just going time and time again about how he was investing in these areas that no one wants to invest in, that don't look white and rich. And time again, he proves the critics wrong, prints money, and then does it again. And he was just laughing. And he goes, I don't think any of you even want to make money, because you're not looking at these deals, and this is easy money. And that was years ago that he did that. And nothing's changed, I think, for that group of men. And it's unfortunate.
Yeah, and like people are, and part of it kind of also I look at all like these larger like above average size funds like going to other parts of the world looking at other startups, but I'm like, have you not seen
It's
what's around you? Are you that
That's
blind?
100% true.
Yeah, I'm
That's a
just like,
hundred
why are you
percent
looking in
true.
India when we have the talent here? Maybe you're just driving by these HBCU schools and thinking that they're not smart, which is terrible, by the way. I've met a lot of great software engineers from like Morgan States and stuff like that because they take
Hmm.
pride in the fact that they need to stand in society. And I think
Hmm.
that's good coming from a person that's half black myself. I was surrounded by that. But yeah, with I guess with that being said, do you have any closing remarks? This was a great, by the way, the second half of this conversation is what our audience needs to see. I loved every single second of that. Thank you so much.
Well, I'm happy to be here. And honestly, the only thing I would just say is for all of the founders that are listening to this out there, just keep doing what you're doing. Talk to your customers, find ways to make your customers' life wonderful, and then you'll figure out how to get them to pay for it. It's a beautiful system. And just keep working at that because you're helping people. And it's hard work. And we stand to help you and to support you and, work with all of you.
Yeah, yeah, guys, and like I said, this in my very unbiased but completely biased opinion, this is the best interview ever because it's coming from Texas, and the best state is indeed Texas. So, guys, I will link everything to Sputnik ATX VC in the show links, guys. Drop some comments, and yeah, guys, I will see you on the next installment.